Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. Now you might remember from last time that prices reached a whole load of targets topside, enough that I had to tidy up this daily chart quite a bit in the process. Anyway, since the move up, we've seen prices move further to integrate what were resistances into support, and then to start breaking those supports. They are the broken 2007 to date downtrend, currently at 244.5, the middle time currently 257.25 of the increasingly significant late March to early July bullish Andrews pitchfork, and finally the 2013 high at 253.5. Indeed, this past week we've broken further supports that are now resistances, notably the 2013 high, the March 2013 high at 240 even. We're now moving even lower, and the space below seems to have limited supports. The lesser Fibonacci level at 232.5, which is coincident with multiple highs this year, seems a good first choice for support. However, I would also look to the rising lower time, currently at 225.75, let's call it, and its recent partner, the short medium moving average, currently at 227.75. Now, admittedly, by the middle to late part of September, we will be pushing up those, the short medium moving average perhaps, but definitely the lower time, towards the lesser Fibonacci level, which will be very supportive as an overall thing. However, I wonder if the market can wait until then. Overall, I would ask you to remember one key thing. This bullish March to July Andrews pitchfork is still very much intact, and until that is broken or reassigned, then it will rule the bullish incentive here. London UK feed wheat. So, since the market peaked up over the flatlining long moving average, currently at 195.80, and actually failed to make a single close over it, prices have dropped away. The last 2 weeks we've seen prices dip and close below the medium moving average, currently at 191 even, the 2021 50% Fibonacci line at 189.5, the 50% Fibonacci line of the August 2020 to May 2021 move at 188 even, and most recently the flatlining short medium moving average, currently at 184.40. We've also started to test some lower, lesser Fib congestion at 182.20 and 181.60, but we've not as yet closed below it. Overall, we now seemingly have a bit of ammunition overhead to continue to pressure prices lower. And apart from the late July hesitation between 174 and 181, there seems to be little in the way until we reach down to the July lows. Now, to try and remedy this lack of support, I have drawn a bearish Andrews and bearish shift pitchfork for the May to August action. It is a speculative move on my part, but I do note how the middle time, currently at 174.15, sits very noticeably in the way of any move lower. Just please remember this though, this is still after all a bearish pitchfork, and all it may do is just slow the descent, perhaps. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.